Welcome to video 4 of Mortgage Like a Mother, where we're about to discuss how you can either destroy and annihilate your offer with a pre-qualification letter or make that same offer shiny and bulletproof with a pre-approval letter. Recently, I took an opportunity to sit down with some of my real estate agent partners, and we weren't sure whether to laugh or cry when they shared some of the crazy things they've recently heard from prospective buyers. Let me share.
They pulled my credit, and I sent a pay stub. So I'm good to go house shopping, right?
100%, without a doubt, wrong. You have not done your due diligence.
I filled out an online application, and it spit out a pre-qualification letter. How cool is that? I didn't even have to talk with anyone.
Well, no one is going to be talking to you anytime soon at a closing table either. I promise you from the bottom of my heart, this is a human-based kind of process. We have to talk.
I didn't even call the bank, and they sent me a letter saying that I'm pre-approved. That must mean I'm super qualified.
Well, that's going to be really interesting when the listing agent calls the bank to verify your pre-approval and they've never heard of you. Ouch. So you don't know what you don't know regarding the mortgage approval letters, but now it's time for that to change. That is, if you want to have the best possible chance of getting your offer accepted when you find the home of your dreams. There are 3 levels of approval letters. So let's open a bottle of wine and jump right in. No one wants a glass of wine that's only a third full. That's like having what we refer to in the mortgage industry as a pre-qualification letter or a prequal. You can get this very weak, and I mean very weak letter 2 different ways. Maybe you've spoken to a lender and they pulled your credit, simply asked you to verbally describe your income and assets, and poof, you have a prequal letter. A prequal letter can also be received by filling out an online application. You give the system permission to pull your credit and it relies on the information you've entered. But what if your information is incorrect? Remember Oscar the Grouch in the previous video, garbage in, garbage out? You haven't purposely tried to trick the system, but also you're not an underwriter who knows the ins and outs of mortgage guidelines. But now you have a shiny pre-qualification letter that is incorrect and you're not going to get that house. This shows just how important it is to speak with a professional. Nothing has been verified in either of the above examples, and chances are that what you have in your hand is very inaccurate. This is the weakest letter you can possibly present when making an offer, and everyone from the listing agent to the seller knows it. Everyone can agree that a glass of wine 2/3 full is much better than one that's only 1/3 full. A pre-approval letter is the mortgage approval version of a glass of wine 2/3 full. A lender will pull your credit and actually verify what you verbally told them regarding your income and assets. This means you're going to need to roll up your sleeves and actually provide some various financial documents such as W-2s, paycheck stubs, bank statements. A lender is not verifying these numbers because they don't believe you. It's because you might not understand how to correctly express certain numbers. For instance, if you've been on the job for only 4 months, you're brand spanking new, and your income package includes a base salary of $60,000 a year with a bonus potential of $15,000, you might verbally report your earnings as $75,000. But because you haven't been on this job for 2 years, you most likely will not be able to use the bonus portion of the income. A pre-approval letter requires a licensed mortgage professional to verify your qualifications and carries so much more weight than a pre-qualification letter. By providing this type of pre-approval letter, you've put yourself light years ahead of the competition, and the seller and the listing agent are going to know that, and you're going to be a super strong contender. And now for the best option. Like a full glass of wine, a pre-approval letter with AUS approval is the best you can do. Remember from our previous video, that's automated underwriting system. At some point in the loan process, your application will be run through this system. Why not do it in the beginning to add strength to your pre-approval letter and therefore your offer when you find that dream home? At this level, your loan officer has entered all your information into the computer system to get an actual approval from the people providing the money. Fannie Mae, Freddie Mac, FHA, VA. So you have a pre-approval letter that includes an AUS approval, you are considered the cream of the crop. The seller knows that if they accept your offer, there's an incredibly strong possibility that you'll be sitting across the closing table from them, taking their keys. Remember that you always want to view things from the seller's perspective. If you were selling your house, do you want a fly-by-night, let's hope it sticks to the wall kind of pre-qualification letter? Or would you be more likely to accept an offer from someone who has done all the work and proven they are serious about closing? After a pre-approval letter with AUS approval, the only thing left to do is have a full underwriting approval. This is where an actual human underwriter verifies everything you've provided. Typically, this process happens later in the mortgage process because it involves having an appraisal and title work. We'll talk about those things later in the process because they don't involve the pre-approval. Your don't know what you don't know box is getting so much smaller because you now know what kind of letter it takes to make the strongest offer possible. And an added bonus, we got to share some wine while learning. So, let's move on to the next video where we discuss how your credit can make or break your ability to buy that dream home. Let's figure out what you need to do to have the best possible credit, which will ensure that you get the best possible loan terms. And nobody wants crappy loan terms, do they? No one wants a high rate and high closing costs. I'm going to go over the most commonly asked credit questions, and if you have any questions, I'm just a message away. Please remember to subscribe, like, and ask all the questions. I'm 100% here for you. And until next time, my friends, cheers.